And super excited. Hey everybody, welcome. I'm Rob Booker, best-selling author of Adventures of a Currency Trader and Trading by Faith. Happy to see you here. Today we're going to talk about becoming a professional trader. I got a question on Facebook from someone who watched yesterday's video and asked the question, how do I become a pro trader? So we're going to talk about that today. We're also going to do a little bit of trading, and we're going to try not to cut off the top of my head. Welcome to you. Let me know where you're from. Leave a comment below. Super happy to see you here. An email should be going out today or tomorrow with an invitation to get information about the brand new class that will be released on Monday. I'm going to work this weekend and get all those videos recorded, and let's get right to it. Let's take a look at the Australian dollar, Japanese yen. It's overbought. It's divergent. It's bearish divergent. It's got no binary options available. I don't know why I was looking at the Australian dollar, Japanese yen. Is the euro yen looking similar? Let's take a look and see if it is. It is sort of looking familiar. Hey Ben, hey Samuel, hey Nicholas, hey Mike. Nice to see you all here. Hope you are enjoying these videos. Okay, the euro yen, I mean, it kind of looks bearish, right? But not really particularly anything spectacular. And nothing's really affordable here. Wait a minute. How could these even be priced at this? 4 minutes left to go. 130.08. Oh, it's below 130.08 already. Nah, that's not going to happen then. What's the Australian dollar looking like? What's the US dollar, Japanese yen looking like? Do you remember earlier this week we traded the dollar Swiss on the 60-minute chart? Do you remember that? We traded the US dollar Swiss franc. We traded a binary option that expired this week, and we shorted the dollar Swiss because of this bearish divergence at the top of the charts, right up there, and it did drop, and that trade already closed. It closed with like 65% of the profit that was available on that trade, so that turned out really nicely. US dollar, Japanese yen, that's the one I'm going to look at. 3 minutes left to go. Can we print some kind of hanging super giant candle wick on this thing? 2 minutes left to go. Can we close below 112.43? No way. Can we close below 112.47? No way. Maybe way? That looks delightful. Everything's really expensive here. Holy smokesers. What's the British pound look like? Already made its move. Ooh, the euro. What are you doing? How you doing? All right, let's go back to the dollar yen. This looks like pretty much garbage today. What are the longer-ish term charts looking like? Dollar yen might rise today. Maybe we trade something a little longer term today. Maybe something that expires today by 3 and closes above something really cheap that might 112.80. That's not that far up there. 112.80. Maybe something that closes below 112 to offset it. So if the market gets real bearish, risk 8 to make 91. I'll do that every day. And then maybe if we go above 112.80, can we get that for cheap? 16 bucks to make 84. I'd like to spend less than that. I'm not really into overpaying for these things. 112.80 is up here. That's the one that I'd want. It is the one that Yeah, we talked yesterday about the price you pay for something is so critically important that if you overpay for a financial instrument, it's going into your inventory, it's going into your box, and you got to get rid of it later on. And if you pay too much for it, then how are you going to get rid of it later on? What are you going to do later on if you pay too much for it? You're going to be holding on to this trade forever. Like, the British pound Australian dollar. I'm short the British pound Australian dollar right now. And you can see here it's just been rising, rising, rising. And I bought it really early on. I mean, excuse me, I sold it really early on, right down here. So this has to fall all the way down here in order for my trade to go profitable. Well, that's dumb, right? I mean, it'd be better to wait and wait and wait and wait and wait. I think part of going pro is about waiting. All right, enough of that preaching. I'm not going to sit here and yell at you and preach at you. I'm going to leave. I got $1 yen trade open right now, so if price falls today, that's fine. Let's look at the 5 minutes again. See if we find something we can sink our choppers into. All right, so we have another 5-minute candle. Can we fall below 112.43? Oh, we are below 112.43. No, we're not. We're at 112.46 right now. Can we fall below 112.39? That's super cheap. Risk 10, risk 9 to make 91. Yeah. Yeah. I would do that. I mean, it's been bearish today. Yeah, let's see this. We got these trades open. Ooh, it's already profitable. Nice. Let's get a win out of this, right? Let's take a look at where price is. We're at 112.44. We need to go below 112.39, which it's not really likely that we're going to do. Let's just take 10 bucks, 8 bucks. Okay, we got a win. Sweet. Okay, I'm gonna walk around here to the big board, and we got a small win there. If you like live trading together, that's great. I do too. We're gonna do a lot more of that in the brand new class. I'm gonna switch the camera around, and we're gonna talk about going pro versus being an amateur. So yesterday, inside of our comment section on the YouTube, and I got to find the pen that I write on the whiteboard with. Inside the comment section, somebody asked, hey, I want to go pro, and how do I do it? And there's a bunch of things I want to just list off. I want to list these things off. And I think that the first thing to get straight is that there is a distinction between going pro and making a lot of money within a short period of time. So some people think that going pro, they think this means like get rich quick. That's what some people think going pro is, right? They think that going pro means getting rich quick or being able to make a lot of money within a short period of time. And I think that's just a complete misunderstanding, and it's totally ridiculous. Anyway, so let's talk about that first. And by the way, welcome to everybody that's here, especially those of you that are here on Facebook and YouTube. Thank you so much for being here. I really appreciate it. Thanks for being here every day. Some of you are coming back every day, and I hope what I'm providing is helpful to you. And if it is in any way, share the video on your social stream, on your Twitter, or anywhere else. And hit the subscribe button on YouTube and click the bell to get notified when I go live. I'll be going live every single day for the foreseeable future at 9 a.m. Central Time, just like we did today. We'll do some lessons, we'll do some trading, and we'll just get some work done, hopefully, together. All right, so we had a question about going pro, and I first of all want to make a distinction between going pro and getting rich quick. Getting rich quick is not part of being a professional. Getting rich quick is actually the goal of an amateur. So if you're an amateur, what you want to do is make a large amount of money within a short period of time. You don't mind taking enormous amounts of risk. You don't mind blowing up trading accounts, or you do mind all of that because you've made a mistake and you think that being a pro means that you know how to turn a small amount of money into a large amount of money in a short period of time. So here are some things that going pro really actually means. So there's just a variety of things. One is a focus on the big picture, the big pick. This means that you don't think about what you can accomplish within a short period of time. You think about what you can accomplish over a longer period of time. For example, as I said yesterday, traders often overestimate what they can accomplish in the next month, and they underemphasize and underestimate what they can accomplish over the course of 7 years. So if you think about the big picture, this means that you're not thinking about what you can make in the next 30 days. You're thinking about what you can make in the next 3 years. And over the next 30 days, you might make zero. Over the first 90 days, you might make zero. Over the first 11 months, I made zero. The first 11 months of my trading career, I made zero. I couldn't pay my rent. I was writing contracts. I was building websites. I was doing every single kind of extra kind of employment that I could even find myself doing, and I still hadn't made $1. I remember, because when I started out I was a total amateur and a complete noob, here's what I did. We used to watch the trade balance report, because the trade balance report in the early 2000s would really move the market. I don't know if you like hearing these stories, and if you like hearing these stories, leave a comment below, especially on Facebook, because I can read those comments later. And I'm going to answer every single one of your comments, and I'm going to respond to all of you, so thank you. So in the early 2000s, the trade balance report was the non-farm payroll report. It didn't report employment numbers, it was just the big one that really moved the market. And we had this idea that we could place orders above and below. We could place buy orders above and sell orders below. And the market would be moving in a range, and then it would break outside of that range, and it would take all of our orders, and we would get really rich really fast. And it would work and work and work and work and work until it didn't work. And so I had this idea in the early 2000s when I was first starting out that I was going to make a big pile of money. So I remember sitting at my in our first house in Wheeling, West Virginia, at 101 Euclid Avenue in Wheeling, West Virginia. It's a little tiny house. You can find it on Google Maps. And I remember sitting at my computer there and watching the trade balance report come out. I had a $4,700 account at that point. And I remember it jumped up, opened up all of my buy orders, and I think I was at one point up like $6,000. And then everything stopped. My platform didn't work, my broker didn't respond, and price fell back down. And all of those trades were still open. And they had stop losses, but the broker was down, and it never hit the stop losses. And I lost $4,700 in about 5 minutes, because I wasn't thinking about the big picture. I was thinking about the moment. I wanted to trade what I could have later on for what I wanted right then. It was immediate gratification, and immediate gratification is the enemy of professional trading. So the first thing that you want to do is, instead of thinking about doubling your account or believing all of those liars that talk about doing that kind of stuff online, instead of trying to make $4,700 or doubling my account, what if I had just thought about making $1 or $2? So the second thing that a professional trader does is builds an account, or what I like to call accumulates. A truly wealthy person is someone that's accumulated something over time. Compounding. A truly wealthy person isn't going to put the shoulder against the wheel and work hard for every single dollar that's made. A truly wealthy person is going to let the market compound for them. It's going to let things build up over time, and let interest work for them. Let a robotic system work for them. Let a system work for them. And doesn't necessarily worry about making all of the profit, but maybe making some profit and building it and accumulating it and compounding it. You see, a professional trader, in hedge fund manager, for example, let's say somebody who's managing even just a small hedge fund, 100 million, or maybe a little bit larger hedge fund, 500 million. These people aren't can you imagine if some idiot running a hedge fund, that their goal was to turn 100 million into 200 million in a year, or 500 million into $1 billion in a year? Can you imagine what kind of moron that would be? What kind of an idiot that is? That's the dumbest hedge fund manager in the world, and certainly there are people like that out there. This person is making 2% of the total assets under management and between 20% and 30% of the gains that they make. So this person, if they walk in the office every day and don't die, they just fall out of bed and have their driver take them to the office, their fund's going to make $2 million a year. And this fund's going to make $10 million a year just for waking up in the morning. And that's enough to turn the lights on, hire everybody, have a bunch of Bloomberg terminals, you know, and fancy lunches at the Four Seasons in New York. Or breakfast. That's what I want to do. I want to have breakfast at the Four Seasons in New York. Does anybody want to go to breakfast with me at the Four Seasons in New York? I don't know. Do they have pancakes? That's what I would like to have. So this hedge fund manager is focused on modest, stable growth. So to give you an example of what this would mean for you as a retail trader, our lead instructor, Jason Smith, he works with me. He's my lead instructor. He's on the DarwinX platform. And that's a social trading platform. Jason Smith has a smaller trading account. And I would say it's under, let's just say it's under 10K. I'm not going to tell you what his account is. That's his business, not mine. Maybe he can do a webinar if you want to hear from him. Maybe we can get him on a webinar. But it's under $10,000. But DarwinX, because he's ranked 11th in the world, the DarwinX platform allocates hundreds of thousands of dollars in trading capital to him. And he gets to share in those gains because he's a responsible trader who grows the account modestly and repeatedly in a stable fashion with a focus on, like we said yesterday, and this is number 1, even though it's number 5, a focus on preventing massive drawdown. That's his focus. That's the number 1 most important thing. So he has modest, stable growth and low losses. You want to be a pro? There's your list of things. There's your list. That's the list. All right, let's go back over here. There's the office. You like, I don't know if you care to see the office, right? Zoom in there a bit. Walk myself around to the other side. I hope that was enjoyable to you. If it's not enjoyable to you, find somebody else to watch on YouTube. Okay, let's take a look at what's going on these longish-er term charts. Can we find a trade on the dollar-yen that we can take today? Can we get in something affordably? Let's take a look at the markets here. Dollar-yen 3 p.m. contract, 112.80, 10 bucks, 9 bucks. 112.80, 10 bucks to make 90. Okay, if price jumps up a bit, that'll go profitable, hopefully. So now we benefit today if the dollar-yen goes up above 112.80, and we benefit if it goes below. If it stays inside of this range all day long, then we lose 20 bucks. That doesn't seem like a big deal at all to me. Let's look at this again. I wasn't showing my screen. Here it is. So let's take a look at the screen. So this up here is 112.80. And if price rises above 112.80 today, then we do well. If price drops below 112, then we benefit. If price stays inside this range here, then we don't win any. Our trade is a loser, but we lose $20. So we're basically risking 20 to make 90 is essentially what we're doing, because we can't have both of those be a win. And the only thing that can go wrong, so to speak, here is that price doesn't really move out of this range by 3 p.m. today, Eastern U.S. time. And that's a risk I'm willing to take. That seems completely reasonable to me. I'm not worried about that. We could look at other 60-minute charts. For example, the British pound U.S. dollar. Take a look at that one on the longer term charts. I don't know if you like doing any of these trades. I don't know if you enjoy this at all. But what if we gave it until 7 p.m. and what if we said by 7 o'clock tonight, price is probably going to rise above the top red line here, or it's going to go below the bottom one here. And these levels are, on the bottom side, 31.80, and on the top side, 32.50. So rise above 32.60, 32.80, that's $11 to make 89 or 88. And below 31.80, risk 21 to make 78. And the only thing that could go wrong, so to speak, on this is that we might just go sideways. So I'll be thinking of that one next. That's the next one I'll be thinking of. Now I could also, of course, decide that I'm just going to trade spot FX. I could just jump in here to the market and trade spot FX, and I could take a short trade and a buy trade and a sell trade if it breaks out of that range. Or I could take a buy and a sell trade right now. That doesn't make a lot of sense to me. I could also just wait for a sell trade or a buy trade to completely set up, and then I could take a spot trade. You know, and we could cycle through some of these majors on the 60-minute chart and see if any of these things show a trade that I might like. You know, like a buy trade on the Euro British Pound. You know, I kind of like that. I like the idea of going long on the British Pound down here at what appears to be almost the bottom. I wouldn't mind that if I could get something that had a long enough expiration. You know, something like, you know, the weekly ones expire in 1 day. So I'm not really interested in those. So you didn't see any of this. Here, I'll show you the chart again. I really hate it when I do that. Sorry about that. So there's the Euro British Pound. You know, clearly in a downward trend, but we had 1, 2, 3 times divergence. When you get 3 Knoxville divergences in a row, you're going to get a move up, usually. Not all the time, but usually. And not only do we have a monthly pivot up here, we have a missed weekly pivot from last week and an unhit weekly pivot from this week. This thing really looks like it wants to, at some point in the very near future, move upward. Okay, I've got 2 YouTube videos coming out today. The first one is the recording of this video, which is posted immediately. The second one is I walk you through what I do when a trade goes wrong. Remember that British Pound Australian dollar trade I talked about at the very beginning of the broadcast? I made a video today about the steps that I took to do something about that trade, which was absolutely nothing. And then the steps that I took on the British Pound New Zealand dollar to do something about a trade that went wrong, where I did do something about it. And I show you my real account. I'm going to publish that video a little bit later on in the day today. So subscribe to the YouTube channel, and you'll be the first to know when that video comes out. I love you all. Thanks for being here. And I'll see you tomorrow morning at 9 a.m. Central Time. Bye for now, everybody. Love you.